This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. Paradoxically, we did have some very negative news, especially with the first quarter U.S. gross domestic product showing a 1% decline as compared to the estimate of a 0.5% drop. And yet, stock index futures performing very well. Also, we had pending home sales coming in on the weak side, although showing an increase. The increase was smaller than expected. So once again, we are seeing the situation where the bad news is actually the bullish news. This is true from a point of view of how the news is likely to affect Fed policy. With these weak economic numbers, the Fed is likely to hold off on raising interest rates, possibly until 2016. Right now, the consensus view is that the Fed will raise rates sometime next year, probably in the second half. So either way, it appears that stock index futures are headed higher. This is a trend that is likely to be a long-term trend. So look for more of the same. Further gains ahead appear likely for stock index futures. In the currencies, the dollar index coming under some pressure. This after the GDP number coming in as weak as it did. For the most part, other foreign currencies are trading higher by default as traders focus on the U.S. GDP number. Some extra strength coming into the Australian dollar. This after the report showing business capital expenditures are likely to increase in Australia. Longer term, we feel that the dollar will work lower. The pound will probably continue to advance as the UK economy remains the strongest economy in Europe, and the yen is likely to work lower. Also, we did have some rather negative numbers out of Japan as far as their retail sales, falling 13.7% in April. This is the fastest and largest decline in over 14 years for Japan's retail sales. So this sales tax increase having a very negative impact on the economy. So look for lower in the yen longer term. Credit markets, higher prices this morning. We did have yesterday's 5-year note auction very well received with yields at a 6-month low for that issue. Today we have the 7-year note auction. So nothing changing in our long-term view on Treasury, still looking for higher across the board. Still thinking that the long end of the curve, the 30-year bond, will be the leader to the upside, and this is a trend that is likely to last for quite some time. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.